certainly plenty happening, and I think it's good time to go to our guests to try and take a sense of what to do with some of these. On the technicals and derivatives, Ajit Mishra, and on the fundamentals, Lancelot Dikana. Gentlemen, both of you, thanks for joining in. Ajit, we'll start off with a narrow subset first before I get to the broader end of the spectrum, or rather the Nifty first. But PSU banks, it's an obvious guess that because of the belief of a CRR cut, there is traction yesterday and today. Very strong moves that have come in both these days. Do you see more upsides in the very short term here?
Good afternoon, Neeraj. So certainly yes, because Neeraj, there's clear identification for the performers, and in the last 4-5 months we saw that the PSE basket, when the PSUs were also declining alongside with the other names, they didn't participate much on the downside after a certain percentage, means from 7,500 mark to 8,000 mark from the record highs in the PSU banking index to around 6,200 mark. And after that, almost like for 1.5 months, we were seeing consolidation around the major averages. And finally, we have breakout from the same decisive breakout, I would rather say, in some of these PSUs named like Bank of Baroda, SBI, they are leading from the front. Then now we are started seeing catch-up move in Union Bank, Bank of India. So it seems like that the next leg of the up move after almost like 2-3 months of consolidation, PSU banks alongside with the select private banking majors like SDFC, ICICI are likely to lead this rally towards new high in the banking index.
Okay. Within the PSU banking space as well, there are certain banks which will likely benefit disproportionately in case of a CRR cut. Some of those gains will likely get offset in case of a repo rate cut as well. Let's pull up, let's ask Ajit. Actually, Ajit, let me come to your picks for this afternoon.
Yeah, so basically, in line with the tone, SBI from the PSU pack is almost like a week-long consolidation that we have seen in the stock. And after a very tight range, this consolidation looks set for the next leg of the up move. And we are eyeing 890 in the immediate future. So with stop at 848, one can go long in SBI. Other name from the pharma basket, which is outperforming the sector, Divi's Lab, it's consolidating around its record high. Off late, we are seeing a marginal pause, so it's basically offering opportunity to those who are sitting on the sidelines for any fresh buying opportunity. And in the next move, 64.60 is something that we are eyeing as an immediate target. So with stop at 61.50, one can buy Divi's Lab at current levels.
Interesting that a pharma name keeps on propping up, but I think the bigger question is that if we indeed close above 24,500, aided by a very strong move in banks, can that actually like, and any levels that you look out for?
Yes, sir. See, all these stock has started buzzing off late, but if you talk about the sector, relatively outperformance, we have seen from HAL and BEL. They were the one basically who started this rebound, and then we are seeing a catch-up move in Majgaon, Cochin Shipyard, and the other names. Within the pack, I feel Majgaon Dock, because this stock has also witnessed decent time-wise correction. In fact, price-wise too, and off late we have seen a reversal, short-term reversal in stock. So probably it might take a breather after this recent up move. So one should not go aggressive on buying. One should rather accumulate the stock within the range of 47 to 4,800, and maintain a stop loss at 4,500 on the closing basis for the potential target of around 5,400 to 500 in next 1 to 2 weeks.
Okay, so those are some names for you in the shorter term. The entire life insurance pack actually in focus, but HDFC Life in particular, they've decided to hike. Any on your radar? And HDFC Life in particular, because it's a Nifty 50 counter. Just your quick views.
So yes, in fact, if you see that almost like 2-3 weeks of move, they are largely underperforming the markets big time, and in fact, most of the name they have corrected roughly around 20%, 15-20% on an average. So yes, most of the name they are slightly oversold, and they are pretty close to their major support areas as well. So that might result in some consolidation or recovery as well. But since most of them have already slipped below their major averages on the daily charts, so they might be like, capped upside also in case if this recovery happens. So for SDFC Life also, I feel that 660, 665 zone is something that it might witness again some resistance. So if you have any existing position, you may stay put with 640 as a stop loss and use any recovery towards 665 and 670 to reduce your position, and stick to the names and themes which are outrightly outperforming or at least trading in line with the index.
Okay. Ajit, as well as Lancelot, thanks so much for joining us this afternoon. Believe both of you will have to leave, so thank you so much for joining us.